Well, hello and welcome, my loyal YouTube subscribers. Let's have a look at what is going on. AMD is a trade that we got into last week here on the channel. We'll talk about that in a moment. But before we do that, let's talk about the overall market. We have had a move higher since we last spoke. We are still above the 21 EMA, which is the line in the sand, short term on a daily chart between bullish and bearish. So we are still above that 21 EMA right now. We haven't got to the 50-day moving average, which I thought we might do, but we're still above the 21. If we do close below that during the week, that will be a bearish development, but right now we are still above that. Now you can see here, you can see the pole, and you can actually see a bull flag forming here. And if you have a look at this on the workspace, we can see this on all of the major indexes. The S&P 500, bull flag forming above the 21, bull flag forming above the NASDAQ, even though it had a pretty significant move down on Friday. Same here on the Russell, the same here on the transports and on the industrials. So this is a bullish charting pattern where you get a move higher, then you get some consolidation before then breaking out. Now, it hasn't broken out yet, so obviously there's no trigger to go long or to be bullish, but it is setting up on all the major indexes. So we'll watch that carefully. However, if it does close below the 21 EMAs that we're seeing here, these yellow lines on the chart, then obviously we will pivot, we will change direction. Okay, but if we have a look here at the chart right now, that's what we're looking for. Okay, we're still in our bullish opening range mode, no doubt about that, and we will trade what we see and not what we want it to be. There's a lot of doom and gloom out there right now. There's a lot of fear. I understand all of that. Yes, we could be entering into a recession. A recession normally lasts 12 to 18 months. That could certainly be a big drag on the economy. Oil is going up at a large rate. Some people are spending 30% of their take-home pay to put gasoline or fuel, petrol, whatever you call it, from wherever you are in the world, into your car just to go to work, right? So the cost of living is through the roof, right? Food is risen at its highest pace in modern history. We know used cars are going up. We know the cost of living is going up much more significantly than what they are telling us. What's that a result of? It's a result of increasing the monetary supply. How does the monetary supply increase, Sean? Not through the central banks, which a lot of people think. It's actually done through the banking system. When the banking system lends money, they literally create money out of thin air. Now, if they lend money for productive assets, that doesn't cause inflation. But when they lend money and it's spent on non-productive assets, then yes, that does cause inflation, which is what we're seeing right now. That's what's caused this. So raising interest rates, which is what they're trying to do now to combat inflation, that's not going to fix the problem if the monetary supply keeps expanding. So what they're trying to do now is quantitative tightening, which is more the point, but really it's not so much that, it's what the banks are doing. Are they lending money, and are they making it more difficult? Is credit available? Are they investing that credit into productive assets? Those type of things is what you want to be looking for. But there is a lot of uncertainty out there, no doubt about it, right? Ukraine, Russia, the whole thing, we know there's a lot of uncertainty out there, right? So we've got to be mindful of that. And, is the Federal Reserve going to raise rates at least twice more? Yes, probably. And will that put the markets and the economy at a breaking point? Yeah, probably. I don't think they'll be able to afford to raise rates more than another 2 times before they really need to pull things back a little bit. Don't forget, we're coming into midterm elections in the United States. There's the direct relationship between oil and the current administration, right? So when oil is moving up and putting gasoline or petrol in your car is much more expensive, the current government doesn't do too well. There is a direct relationship with that. When oil is down and people are happy, they can put petrol in their car, gasoline without a huge amount of cost, then the current government tends to do well, right? So that's a big issue. I don't know what they're going to do there. And now we're looking at the fact that the EU plans on stopping buying Russian oil in the next 6 months. Energy is still moving up. I mean, if we have a look here at the major sectors that we watch, you can see that nothing here is particularly bullish. The only thing that really is moving up is energy, and is still respecting that 21 EMA on a daily chart and still looking quite strong. So money is obviously flowing into this particular area. We know that there's really insufficient alternatives right now to oil. Still strong global demand, particularly when countries are starting to open up after the pandemic. And, we could start to see energy in particular continuing to move up. Now, the combined put call ratio right now is sitting on the 10-day moving average is sitting at 0.98. This is actually bullish. It shows that there's too much fear in the market. There's no one left to sell. So that's actually a bullish indicator. But that in and of itself is not something you act on. It's one of 10 that I use. The TRIN is neutral at 0.39. Okay. And that is not really helping us because that's neutral. The skew, which right now is 122, that's neutral as well. If it was above 135, the smart money would be worried about a market crash right now, but right now they're not. So that's neutral. So there's a bit of indecision right now as to where the very short-term next move will be. So we have to trade what we see and not what we want it to be. Okay. Now, for me right now, I'm going to set up a trade on energy, on the sector itself. If we look at energy, obviously, breaking to new highs here. If we look at it from a weekly perspective, it took out this level here at around 80. That was a resistance level, broken above that strongly. And then we look at it from a monthly perspective. We've got this prior high here of around 101 right here. Okay. So we've broken up above this level here. We're marching up to that 100 round number resistance and the prior high. I'm looking to set up a trade that gets above 95 on the sector itself, energy. High probability trade. I'm not going to take a lot of risk. There's still a lot of uncertainty and there is a lot of fear out there right now and a lot of volatility. But volatility is what you need to make money. Okay? We don't want things to be flat. Can't really make money as a trader when things are flat. So volatility is your friend if you understand how it works. So looking for it to get above 95, okay, in the next 6 weeks. Okay, could that happen? Yeah, I think it could. Right? I think it's a high probability trade, so that's why I'm going to set it up. So we'll talk about that in a minute. But AMD is one that we got into last week right here on the channel. I set up a bull call debit spread. I was looking for it to get above 105. That was the goal. So let's have a look at the actual stock itself, AMD. It certainly did that on, go back to it, daily chart. Certainly did that on Friday. We can see a big move up there. On Thursday, big move up there. Would have been a great day to get out of the trade, but I only speak to you once a week. And then it pulled back a little bit. Still above 105, sitting at $106.30. So it's moved up a good $4, just over $4 in the last week. I'm going to take the profit now. When the market makes money available to you, take the profit. And I'm going to take the profit right now. It's worth $3.15 a spread. We bought it for $2.55. That's a 24% return in a week. So just close that trade out now. Take a 24% return on your money, lock in a winning trade, and we're done. Now, the new trade for this week will be on the energy sector itself. Okay. So what I'm going to do is I'm going to set up a high return vertical here, and I'm going to, with the energy sector, the ETF here that tracks energy sector, it's trading right now just below 90. I'm going to enter today, or obviously on Monday, tomorrow, and it expires on the 15th of the 7th. So that's 40 days from now. What's the aim of the trade? To finish above 95. Okay. At expiry, when's expiry? The 15th of the 7th. Okay. 40 days from now. Or move higher for an earlier profit, just like we did with AMD, right? Moved up within a week, made a 24% return. We're going to close the trade out. So we're going to sell the 95 call, buy the 90, okay, $5 wide spread here. It's going to cost me $175 a contract, okay, which is the cost of the buy minus the income from the sold. Okay, the difference between the two is your out-of-pocket expense, $1.75. The maximum value is the difference between the two strike prices, the one you're selling, the one you're buying. That's what a spread is when you buy and sell at the same time. 95 to 90 is $5. That's the maximum value minus the cost of $1.75. $325 is our maximum return, or 186% return on risk without a stop. It's pretty good. Now, our break even, what price we need it to finish above for us to be profitable, okay? Our break even price, need to know where you're losing money or where you're potentially going to make money, is the buy strike 90, okay? Plus the cost, $1.75, is $91.75. Okay, so that's a break even, just above where we are now. I'm going to set the stop at $75 a contract. Okay, we're spending $175 a contract. The stop's at $75 a contract, so we're risking $100 to make $325 potential profit. So our potential profit is 3.25 times higher than the risk that we're taking to achieve it. So that's a good example of asymmetrical risk, where we have got the potential profit higher than the risk. If we continue to do that, structure all our trades like that, we will make money. Okay, so that's what I'm looking to do for this week. Now, how have we been doing recently over our last sort of 30 or 40 trades? We've had 29 winners in our basic program that we have, 4 losers and a break even. With our other program we have called the Money Wheel program, we've had 18 winners, no losers, and 1 break even. So been absolutely crushing it would be an understatement. So let's see what we do. Now, obviously, we're going to be putting AMD in there again. We already made AMD some money back there. We'll put AMD in again because we're just closing it out this week for 30 winners now, right? But we'll put that in next time. So that's what we're looking at there. I hope you guys enjoyed that, and we will see what the market gives us this week. Remember, trade what you see, not what you want it to be. Block out the news, block out the noise. And the other thing you want to see is the market momentum, the amount of stocks above their 50-day moving average. You want that to be above 50% to really start to see a sustained move higher in the markets. There's a lot of headwinds, though, isn't there? A lot of headwinds in the market right now, and we could roll over at any point. So we've got to be aware of that. But we have improved significantly from a month ago, right? Where we saw less than 25% of stocks above their 50-day moving average. Now more than 40%, but we need it to get above 50. So we'll see. We can make money in either direction, right? We're not married to one way or the other. We will wait for the market to tell us. The market's in control, not us. We trade what we see, not what we want it to be, and we will take it from there. All right, my friends, hope you enjoyed that. Talk to you again next week. All the best, and bye for now. Oh, and by the way, sorry, I forgot to mention, thank you guys so much for all the emails. I was thinking whether I wanted to continue to do this YouTube channel, and whether it was really worthwhile, and if people were enjoying it. And so many emails saying, Sean, please keep doing it. I don't want you to stop. So out of respect for all those people that took the time to send the email to support@cashflowoptions.com.au, cashflowoptions with an s.com.au. I appreciate that. Thank you so much, and I will continue to do this for the near term, out of respect for all those people that sent those emails through. All right, my friends, hope you enjoyed that. All the best, and bye for now.